Hello, welcome back. We continue from where I left off in the previous video. Here we explored the second topic, if the property market can crash like the stock market, a capture from April 20 onwards. So are we expecting a property crash like the stock market? Where do you think the property market is heading? Singapore property market in 2020 will not behave like 2008 GFC. Let's relook into the historical boom and bust of Singapore property market. During GFC, which is Global Financial Crisis in 2008, the property price index dropped by 4.7% and new home volume dropped by 64%, which in essence was 4,200 units in 2008 compared to previous 3 years average of 11,600. So median home prices crashed in different segments and had it corrected with a sharp recovery in 2009, from 2009. So what is a possible cause of 2008 property price correction? Was there an asset bubble in 2008? There was a higher GDP growth of 9%. The announcement of 2 integrated resorts fueled surge in tourism, jobs, foreign investments, and investor sentiments. And the bullish market pushed the prices and the price index to 44.4% in 4 years. Same time, developers rushed to buy lands via GLS and on-block sales during the boom in 2006 and 7. And there was also a large influx of foreign buyers from 2004 to 2007, driving up the high-end property prices after the announcement of integrated Sentosa projects. The foreigners came and bought not just 1 unit or 2 units, they were buying them per plate and several floors. And they subsold them without restrictions. So the government did stop or interfere and allowed the market forces to continue. Willing buyer and willing sellers were the way the government handled the market at that time. So there were no prudent cooling measures from 2004 to 2008. There was asset inflation and there was no price protection for locals. There was very little deterrence against speculation and easy access to credit because of low interest rate environments were the norm. There was also a staggering oversupply of 44,000 unsold units by the end of 2008. So there was a sharp correction for a short time. This correction lasted for only 1 year though, followed by a recovery in 2009. Once again, was there another impending asset bubble from 2009 to 2013? How did the economy recover so fast? Because all governments were printing money in order to stimulate the economy, jobs, consumptions, and money became cheaper and interest rates plunged. So there was an asset inflation and funds from China created another bubble. There was also run-up in the prices from 2009 to 2013 ahead of household income growth. If market is growing fundamentally correct, it is to measure run-up on prices with the household income. Over here, the household income increased only by 24% between 2009 and 2013. The transaction volume grew by 66%. It showed that the market had ballooned. So decision by the government after 2011 watershed election was different. They realized that in the face of clean and cheap money, free and open housing market was no longer feasible. Prudent cooling measures from 2009 to 2013 were introduced, but it was not enough. With that, the flipping of properties could no longer be done. And to protect locals, ABSD to foreigners came into 2011, followed by 2012. And 3 times review of SSD also came into play. Easy access to credit was changed by 5 times revisions to LTV, the loan to value. So more construction of BTOs and HDB flat ramp up for local first timers from 2013. More stringent cooling measures from 2013 to 2019 in the form of TDSR, MSR, mortgage service ratio, ABSD, and LTV, all were tightened and strictly left in place. So SST controlled anti-speculation, TDSR helped control credit limits, and ABSD controlled the asset inflation by local and foreign investment. So with all these in place, do you think property market will crash in 2020? To answer that, let's take a look at the effect of cooling measures. Before we plunge into more analysis, will the property market crash? Unlikely. Is the government in check? Yes. And now here, home prices are lagging behind economic growth. You can see that. Household private home price growth 4.5% lags household net worth growth of 36% from 2014 to 19, meaning household net worth is more than the price growth. There is also a supply overhang. So 31% lower supply overhang, 30,500 unsold units by 2019 in comparison to 44,000 unsold by 2008. There is no, and these numbers still dropping further. So there is no oversupply. More savings from 2013 to 2019, cash deposits increased by 72%. So the cash in 2013 was 490,000 and in 2019 it was 630,000. You can see it here, 490, and you can see that it's 630. So more savings from 2013 to 2019, CPF balance increased by 68%. So in the beginning, it was 250 by 2013, and now it is 400,000 nearly. So that's a 68% increase. So property prices would have increased by 15% in 2018 without cooling measures. So this remark by Minister Lawrence Wong was made recently, and because of the ruthless cooling measures that were introduced, that the price actually got contained and didn't go up by another 15%. So we are still examining if there's an asset bubble and if there is a crash looming. So, and if there is an oversupply. So the population growth is projected to be 21% higher and reaching by 2030 6.9 million. So that is an increase of about 21%, amounting to 100,000 people per year. That means new supplies will fulfill the demand. But what about household sizes? The number of people in the house? That is coming down with various factors as well. So household size has been falling from 4.7 and is now looming at projected at 2.99 persons. So if we divide the population with the household size, we need 36,485 units. The average of HDB is 22, private is 9,960, so the total supply is 31. So we actually have undersupply, there's no oversupply. So we are well buffered for the crisis and the government is in check with the market. So with this slide, I'll end the presentation here. As long as COVID continues, what is in the data may become debatable. My next video, I will analyze the market in terms of if the next property wave is coming.